Welcome to Option Trades Today. I'm Tony the Baptiste and I have a trade idea for you today. January 18th, 2024, and let's see what's going on in the market. Even the S&Ps have regained some of their strength, up 21.75, trading just a few handles, a few points off of their highs. NASDAQ up 220. NASDAQ's had the best range today, as you can see here on the right-hand side of my screen by that large green bar, up almost 1.25%, up $215. The Russell, well, going nowhere quickly, right? It seems to actually be a little bit of a divergence between the NASDAQ and the Russell. As you can see, the NASDAQ going higher and the Russell really not going anywhere. Maybe you could argue it's going a little bit lower. Dow going sideways. One thing that is interesting about the Russell, IWM, would be the ETF. You'll notice it has an IV rank of 36, and volatility has been expanding over the last couple of days. When you look at SPY volatility is 18, also expanding, but 36 for IWM, 18 for SPY. And then we'll go to the Qs, which usually have the highest implied volatility or IV rank, with a 19 IV rank and volatility expanding there also. So of the three, IWM, if you're looking for exposure in the market, would be the highest implied volatility or the best bang for your buck, meaning the bang for your risk that it takes to make a trade. So that's where I'm going to go in IWM and avoid all of the earnings that we have coming up. Now, where are we going to go with our trade? Well, February has 29 days. March has 57 days. Obviously, IWM being an ETF, an exchange-traded fund. It's the Russell 2000. 2,000 stocks represent this number. As those 2,000 stocks go higher and lower, then this will change by that number, meaning each one of those stocks move, IWM moves with it. So I'm going to go to March, closest to 45 days in the monthly options. I like to trade the monthly options. As you can see here, by the open interest, they are quite liquid, plenty of volume, plenty of liquidity. All the markets are a penny or 2 cents wide, just about. So where am I going to go with my short strikes? As you can see, this kind of rust color line right here in the middle, that's at the expected move. So I'm going to try to go right around or at that expected move. I'm going to go to the 202 calls, right at or around that expected move, not including the credit I'm receiving. And I'm going to go down to the 178 puts. Again, I'm just going right at the expected move. You'll see this green line adds in the credits that we're receiving. I actually got less than this. I got 393 for my Strangle, so you can get a lot more, well, a lot more, 2-3 cents, maybe 4 cents more for your Strangle. This is going to use $2,600 in buying power. It does have 2.5 short deltas. I'm going to call it delta neutral, and it has that 66% pop. That's the area that we like to be in. Anything above 60, optimally 65 to 70%, 66 right there. Max profit, obviously the credit that you receive, and then obviously I put mine on when the stock was a little bit lower than this. So as it keeps going higher and I have a little bit of short delta, my trade becomes a losing trade. Your entry would become better. Now I do want to show you something for those people who are in IRA accounts, and yes, you can sell a naked option in IWM in an IRA account, but it's going to use, $25,000 instead of $2,600. What do I like to do? I like to simulate the amount of buying power that I'm using in a margin account. That's what I have up here now, in an IRA account. So let's go, for starters, $20 wider with our wings. Now this is just a simulating a Strangle in a IRA account, or even if you just want to use less buying power, or you like the idea of having defined risk. Maybe it's not, you don't apply this method in IWM, you're applying in something else like NVIDIA or something like that, or a high-flying stock where you want to have defined risk. So I went $20 wide on the call side. I'm going to go $20 wide on the put side, and of course it's going to eat up some of my credit. In my case, I got filled at $3.93, so it's using around 60 cents, a little bit less in credit that I received. My probability of profit stays about the same. I can't argue about that. Your delta stays about the same. This is really the same type of trade, but I'm using less buying power now. I'm only using $1,600 in buying power. So you could go wider than $20 in like an IRA account. Save yourself the 20 some odd $1,000 in buying power for another trade by just using this simple trick of defining your risk in this trade. I'm going to go back to what I have here so you can see the trade that I put on. I put on the 202 178. I'm going to get rid of this call up here. I did it for $3.93. Of course, you could go to our follow page, and I usually have already added the trade there for you. So if you have an account at Tasty Trade, you would have seen these in real time. You can see I did this at 10:18 today. I did it when the stock was 189.51. You can see the stock is a little bit higher, and there's my pop of 65%. And the credit I received, $3.93. My little description, it's a delta neutral strangle in the highest IV equity ETF on the board, which of course is factually accurate because I showed that to you just a moment ago. Okay, if you'd like to see all my trades and any adjustments and any closing that I do to these trades, or you want to watch Tom or any of the other follow traders that we have down at the bottom, or we're going to get a few new follow traders on there for you. A lot of the hosts from our shows coming in the next week or two. So please stay tuned for that. But you know what? Transfer your account to Tasty Trade today. Take advantage of some of the great promotions that they have. And not only that, the customer service that we provide, the accountability that we provide. And you want to know something? You want to talk to Tom directly? Email him, tom@tastylive.com. If you want me, I'm BAT at tastylive.com. I'd love to hear from you, or just leave me a comment down on the YouTube page. You can always reach me there too.